Yes Bank depositors, shareholders and watchers of the Indian financial system wait for details of a complete rescue plan. Investigative agencies are hot on the trail of alleged illegalities that took place at the bank. The CBI filed an FIR today naming founder of the bank Rana Kapoor and his 3 daughters with allegations that include receiving kickbacks of over 600 crore rupees. Meanwhile, the biggest question truly remains whether the bank can be revived. State Bank of India on Saturday confirmed that they would begin by pumping in about 2,500 crore rupees into Yes Bank and take the lead. But with bad loans of close to 16,000 crore rupees, this may just not be enough. The real challenge would be to get other investors on board. So can Yes Bank be revived? Speaking to me on this today are Hemindra Hazari, banking expert, Mythili Bhusnurmath, consulting editor ET Now, and Deepak Shenoy, a founder of Capital Minds. But before I get to them, I have with me Mr. Prashant Kumar, the man appointed by the RBI to steer Yes Bank out of troubled waters. Mr. Kumar, thank you so much for speaking with me today. The biggest question really everyone has is when will this moratorium of withdrawing only 50,000 rupees end?
As per the draft resolution, the outer date is 3rd of April. But all the stakeholders, they are working towards getting moratorium out as soon as possible. And it may be by the end of the current week.
No, so by end of the week, do you mean this coming Friday or Saturday?
Yeah, we are hopeful. We are hopeful. We are working towards that, but let's see what happens.
Okay, another question, Mr. Kumar, is was the moratorium really necessary? I know you will say possibly that it's part of the process, it's part of the procedure, but sometimes it seems it ends up creating more panic than helping in any real way. Do you think that this pain was required, and the fact that depositors sometimes feel that they get the short end of the stick, was all of this required?
No, issue is that you need to follow certain procedural guidelines as per the Banking Regulation Act. At the same time, we also need to understand that these are very, very difficult and complex situations, and some amount of inconvenience is bound to happen. So I think this happens only once in a while. We need to take with a pinch of salt, but this is something which was unavoidable.
You say, sir, this happens only once in a while, but those listening to you will immediately say, what about PMC Bank? That just happened. I know there have been reassurances that all is well with the financial system, but there's some genuine worries there of people who perhaps don't understand the intricacies. They're wondering if their monies are safe. They're wondering why PMC happened and then Yes Bank happened. They're also wondering why depositors suffer while those who make mistakes seem to get away. What would you say to these people?
No, I agree with you, and we appreciate the difficulties faced by our customers and the depositor. And maybe if it happens with any of like us, we would be having the same reaction. But I would like to assure everybody that their deposits are absolutely safe. There is absolutely no problem in terms of safety as well as in terms of liquidity. And before the moratorium and after the moratorium also. And I would also like to give this assurance that once the State Bank of India is also participating in equity up to 49%. So, and we are having full support from Reserve Bank of India and State Bank of India for all our moves. So, I think I would like to reassure all our depositors and customers that going forward, we would be able to come out very fast, and they are going to see absolutely a new Yes Bank, which would be much stronger than before.
Mr. Kumar, is a merger with State Bank of India really unavoidable, as many are claiming? That's something you have said. Mr. Rajneesh Kumar has also said. But there is only a 2,500 crore rupee investment up front by SBI. Where will the other investors come from? And is there real confidence that they will come forward?
So, I think we are receiving lot of investor queries, lot of interest from the investors across the board okay, in terms of private sector, foreign investors and everybody. So I think once the clarity would come, just wait for some few days. Once this clarity would come, then I think your question would be answered.
Do you have clarity on how big the hole in the balance sheet is, though? Because, you know, investigative agencies are trying to find out if there was any act of criminality. But from where you are sitting, is there enough transparency on the financial health of the bank?
No, I think it's too early for me to comment on this. Just last 2 days I was here, and my topmost priority was how to normalize the situation. Going forward, yes, this is something which we are examining, and when we are going to declare results on 14th, then I think we would be able to bring that clarity in a much better way.
Mr. Kumar, by when do you see a revival of the bank? How confident are you, and what is the time frame that you see for the revival of Yes Bank?
No, absolutely, we are absolutely sure and confident about this. We would be able to revive this bank immediately after the moratorium is lifted. Only thing is that we would be back to that stronger position. You need to give us at least 2 quarters.
Well, 2 quarters is what Mr. Kumar has promised. Thank you so much for speaking with us. This is the RBI appointed administrator for Yes Bank, Mr. Prashant Kumar, who was talking about the moratorium possibly lifting by Saturday. The question is, what happens next? What happens next for Yes Bank? What does SBI need to do? And can we really say this is the end of troubles in the Indian banking system? Now, let me get back to the debate and speak with our guest, Hemindra Hazari. I'm going to ask you first. You've been tracking the Yes Bank story very closely. We've talked in great detail earlier as well about what went wrong. Let's focus on what happens next now. And can we really hope to see a revival in 2 quarters, as Mr. Prashant Kumar is saying? What are the hurdles you see on the way?
The major hurdle will be the liquidity hurdle, because once the issue is what happens once the moratorium is lifted. Because depositors, particularly the current and saving account depositors, who require their funds with the Yes Bank for their daily operations, and if they're companies for their working capital management, are under currently severe stress, because if Yes Bank was their main banker, their complete operations have really come to a dead halt. And the issue is then, once the moratorium is lifted and Yes Bank is still a standalone bank with just SBI with supposedly a 49% stake, do they have the confidence to retain their deposits in this bank? I really don't think so, because they won't want to take a chance and they would like to move it, at the earliest. And that is, I think, the critical issue for Yes Bank today is the liquidity issue, because we do not know how far and how badly the depositors have been impacted, because this is a real scare for them and they cannot access their funds. Mind you, CRISIL has done a study where about 200 companies in Yes Bank, which have they've borrowed funds for Yes Bank. Yes Bank accounts for more than 40% of their overall banking system fund requirement. So they're completely dependent here. So it is going to be, I think, the liquidity issue is going to be the immediate problem. And thereafter, you see, Yes Bank requires tremendous, about $2.5 to $3 billion of equity capital, which is the market estimate. Now, who is going to pump in all that money? And we still don't know how the management structure is going to emerge. So I think initially there's going to be the liquidity issue once the moratorium is lifted, and thereafter we have to see the solvency issue, whether the equity people really come on board. But I think mainly, and the immediate requirement is going to be the liquidity issue everyone is going to be focused towards.
The liquidity issue, how do you convince depositors that once the moratorium lifts, they shouldn't leave? That will be key, won't it, Mythili? That depositors should stick on with Yes Bank, and if they move on, then where do those funds go? There will be a mismatch and an imbalance there. Is that one of the big challenges you see going up ahead?
Well, yes, it is going to be difficult, but surprisingly, in fact, Yes Bank did not have a liquidity problem until the moratorium was announced. these fears about liquidity not being sufficient and Yes Bank not being able to pay its depositors have ironically arisen only after the moratorium was declared and there's a cap has been put. So provided RBI does give some kind of line of liquidity and all the depositors who want to withdraw are able to withdraw, then I think some level of confidence will remain. And once they know that State Bank is going to pick up a 49% stake, there and things are going to turn around, some kind of repair mechanism, as it were, is in the works. I think depositors' confidence will return, but it will all depend on how the first few days, immediately after the moratorium is lifted, how those days pan out. Because today itself, we've not seen as much panic really amongst the depositors as we saw on the first day. So I think that the panic was understandable, but it was immediate. So depending on whether they're able to withdraw whatever they need, and particularly in the case of businesses, I think they're the ones who are going to be more immediately impacted. If they get the confidence that yes, they can continue their operations as before, that I think will ensure that some kind of pace returns to the markets, particularly as far as Yes Bank is concerned. But as of now, as Hemindra says, liquidity is going to be the primary issue. It all depends on how it is managed.
What really can Prashant Kumar do? We spoke with him a little while earlier, and he has his hands full at this point. Deepak, I want you to come in on this. It's maybe a compounding factor as well, but with markets looking so dismal today and bleak, we're talking about these global investors. Who are these global investors? Are they going to go back to those who looked interested in Yes Bank before? Are other private banks going to come in? What is the kind of scenario panning out? Because I think there is a little doubt that just SBI by itself is not going to work. You're going to have to need more people coming in and willing to write checks.
Well, I don't know, to be honest. It's early right now. I don't know how much of a check that the bank needs. It primarily needs liquidity, and literally someone like SBI saying, "Guys, don't worry, we have your back. You will not lose any money. All the deposits are safe," and in a sense, convey that listen, if Yes Bank doesn't have money, SBI will ensure that money will be provided, liquidity will be provided, and RBI should make a similar statement. At this point, you have to bring back confidence. Otherwise, the system goes for a toss, and all of the other smaller banks, which have seen a bloodbath in, say, their stock prices, will also start seeing outflow of deposits because people are afraid of moratoriums. Even if you introduce it for one day, people are afraid that they will not get access to their money and then reduce their money in any bank that they don't see viable, or even if there's small rumors of them not being viable. So at this point, you really need very strong confidence generating statements. The money that the 81 bond write down will generate alone is 10,000 crores, probably 8,900 to 10,000 crores.
Yeah.
That itself is quite enough to build some capital buffers for the bank. But I'm not talking financials here from the capital adequacy perspective. That is, if there is no run on the bank. If there's a run on the bank, the primary problem is liquidity. You have to either stem the outflow of deposits or bring in external liquidity from the RBI or SBI and say that we stand behind any depositor who wants to take out his money. Don't worry, we have the money. That's what we need to hear from the authorities right now.
Well, hopefully those reassuring messages will come in. But I want to talk about the 81 bonds being written down. Deepak, let me come back to you on that bit, because that's caused quite a bit of flutter. We had another bank pull out its issue at the last minute over the last couple of days. Now we hear that the organization that represents these bondholders is going to go to court and ask why this was done. How does it augur for the bond market overall, and also for financial stability for investors? Does it also give a glimpse into the fact that investors sometimes are getting sucked into products they're not entirely understanding?
To be fair, investors are always sucked into products they don't have any understanding in. So it's not new for them. People were sold bad insurance policies earlier. Now they're being sold bad bonds, quasi-equity instruments as bonds. So that's not something that's new. The EU has actually done a very fairly comprehensive research on the mis-selling of specifically these kind of bonds of European banks to retail investors to a point where now a suitability test is required for every retail investor that actually tries to buy any of these bonds. So the bond purchase can actually be cancelled if they are found to not be suitable. India needs to create such rules so that retail investors don't go and buy bonds that they don't understand or they're not suitable for. But also, we have to note that these bonds are by nature very risky. It's written in the contract that forget everything else before we even without even talking to you, we can write down the principal of this bond and interest to zero. Without your permission, you agree to that. That is why you're getting a slightly higher interest rate, and therefore you have bought this bond. You might say, so retail investors don't know, but a significantly large percentage of ownership of these bonds are with institutions who should have read the rules, and therefore I can't say that they are not entirely to blame.
Yeah, but it's Mythili, you want to come in on this sort of bad taste this whole episode has left in the mouth, and Deepak is absolutely right in saying that they should have read the rules. But then, if you're going to get technical, before this budget increased the deposit insurance rate to 5 lakhs, everyone kind of knew but didn't really think it would even matter that their deposits were insured only up till 1 lakh rupees. It was just a given that if it's in the bank, it's safe.
Frankly, I think no depositor of any scheduled commercial bank has ever lost any money. The RBI has seen to it, whether through merger, nationalization, whatever you may call it, no depositor has really lost money. So though the insurance has gone up to 5 lakhs, that's only in the case of liquidation of a bank. So I certainly don't think that's going to happen in the case of Yes Bank. And I do agree with Deepak that as far as AT1 bonds are concerned, risk and reward always go hand in hand. If you're getting a higher return, there definitely is a higher risk. And as for the term sheet, these bonds do get written down to zero. So though the AT1 bondholders have gone to court, frankly, they do not really have a case. Of course, a court may take a different point of view, but this is the nature of AT1. That is the nature of the animal. And if you buy into a bond like that, then you must be prepared to lose your money. Yes, it is very sad, particularly if retail investors get into it. And so maybe, as Deepak suggests, there is a case that you protect the retail investor from himself. But that is the nature of any investment in the stock market, whether it is equity or whether it is debt. So as far as AT1 bondholders are concerned, yes, we have sympathy, but not more than that. And otherwise, as I said, this is a case where retail investors do not have to worry. Yes, there is an inconvenience that for the moratorium period, they will not be able to withdraw more than 50,000. But as Prashant Kumar has said, it's quite possible that the moratorium will be lifted up even earlier. So as of now, I think depositors need not panic. They need to have faith in the system because, as I said, no scheduled bank depositor has ever lost money to date.
If the economy globally and in India wasn't in such a bad shape, then Yes Bank may have chugged along. Isn't it, Mythili? Which is why there are so many signs here for the entire system. And I get when you say that, depositors are safe, banks are safe. But these are concerning questions we must ask, that in bad times, it's these weak links that are cracking.
Oh, yes, indeed. It is a fact that the slowdown in the Indian economy has a great deal to do with the rise in non-performing assets. Many of the non-performing assets, not only in Yes Bank, but in other banks as well, are the result of slowing economy, court decisions, as in cancellation of spectrum licenses, coal block auctions, and Reserve Bank's insistence that they make higher provisions, do not do any kind of hand-holding. So I think it's a combination of factors. If the economy was not in such a bad shape, I don't think we would have seen these problems. And as Hemindra says, the problem really is that in the September quarter, the results for which the only latest results that we have for Yes Bank, it was net worth positive. So what has suddenly happened in just a few months to change the picture so dramatically? Because as far as we know, yes, some people had large wholesale depositors had pulled their deposits out of Yes Bank, but there was no run on the bank. And a couple of years ago, there was a run on ICICI Bank, and RBI came to the rescue and managed to quell it. So it is an issue really of we do not know what the true state of affairs is. We'll get to know that only on the 14th. And then also we really do not know, can we rely on the balance sheet? The problem is certainly one of auditors. Many questions need to be asked of the audit profession. We also need to ask the supervisor, the Reserve Bank of India, how is it that suddenly overnight they got into this kind of crisis mode? We knew the situation was bad, but did it warrant a moratorium? Could something else have been done? Or even if you did have a moratorium, could you not announce a moratorium and the restructuring program simultaneously so that we don't have this kind of a panic? I think many things need to be asked, but I guess we always become wiser after the event.
Well, let me go to Hemindra with that question. You know, the role of Rana Kapoor that is now being asked about. I mean, he was told to step down over a year ago. There was a new person in charge. Why did it take so long, and did the investigative action against Rana Kapoor have to be simultaneously with the rescue plan for Yes Bank?
See, firstly, as a matter of policy in banking, I believe ownership must be separate from management. Sadly, in the case of Rana Kapoor in Yes Bank, in the case of Uday Kotak of Kotak Mahindra Bank, the Reserve Bank of India, unfortunately, has allowed this strategy. Now, when you see a promoter who is also a CEO, he has tremendous power over the board, over the senior executive managers, and therefore his writ runs large. Nobody dares question these people, and therefore they have huge latitude in doing all kinds of practices, and I think some of them are now surfacing in these Enforcement Directorate and CBI charge sheets. So in my opinion, you know, UBS in 2015 had shown that there's a lot of risky assets that this bank had given sanction limits to. You know, RBI did not conduct any inspection. It was quite an alarming figure. Then from 2017, I've been repeatedly pointing out on a very consistent basis, every month practically, that there are serious issues of governance in this bank, and it all emanates from the Rana Kapoor being the CEO. So the question is, why has the government waited for a moratorium to be announced and then he has been arrested? This all should have been done from 2015 onwards. You see, we deal with public information. The Reserve Bank of India, the auditors, they have access to, even credit rating agencies, they have access to the inner workings which we do not have. Now, if people from the outside, like the UBS analyst and myself, can be documenting these things from publicly available information, which concludes there's, you know, considerable misgovernance. What is it and why is it that the regulators, the auditors, and all the investigative agencies were not probing? To me, it was obvious, and I've been demanding Rana Kapoor's head since 2017. So this is what we see time and time, you know, again, that promoters should not be managers in banks, and the regulator has to be extremely tough on them. Sadly, the Reserve Bank of India is not feared by banks as a regulator, and that's where the crux has come. What? Even in the Kotak Mahindra case, I find the Reserve Bank of India is capitulating to Kotak Mahindra Bank. So when you have such, you know, policy decisions coming out, this tells you that the private sector banks and, you know, the executives in PSU banks can feel they can get away with it.
Thank you so much to all of you for joining us on the show this evening. And that's all the time we have on the India Development Debate on a day which has been completely stressful for all kinds of investors and all kinds of viewers, whether it's coronavirus fears, whether it's global economy fears, whether it's Indian market fears, whether it's fears about what happens to your deposits. To all of you, I can just say there's no point being afraid, but it always helps to have the best information that you can so you make informed decisions. That's what we hope to help you out with. On that note, I want to thank all of you for joining the show this evening.